Hi student, in this video I will show you how to prepare a cash budget from financial statement, and to illustrate I will take the exercise 6.26 in your textbook. So I have the problem here with me and you can open your textbook. Alright, so when you solve a cash budget problem from financial statement, you will see that they will give you a financial statements, whether that is a statement of profit or loss and the statement of cost of goods sold, and from that you can extract the information that you need. A cash budget will include the cash receipt, cash disbursement or cash payment, and the cash balance. So first we will prepare the cash receipt. Okay, so I will try to illustrate all things in on my right hand side, and so other illustration I'll put on the left hand side. So the first one is cash receipt. So you know that for the manufacturing or service companies, the cash receipt mainly come from the selling of the service or the goods, and in here the selling of the beans is the main business activity. So I circle here. So you have to work out how much of the cash that they collect in March, because we prepare the budgeted cash for March. Alright, so you know that from the statement of profit and loss, we look at here the sales, the budgeted sales in March is 800,000. Alright, so that is a budgeted sale. We know that 80% of the customer pay within the months of sales, and 80% of the customer pay the month after the sales. Alright, so we have the March sales is 800,000, and collect in March is 80% of this. So you take 800,000 times 80%, so we have 640,000. Alright, and we have February sales. You see that February sales were 14,000 box, and how much is the sales in February? You know that they sell $0.5 each bag, and the box has 100 bags, so $50 per bags, right? So 0.5 per bags times 100 bags, so we have $50 per box. So February sales will be equal 14,000 box and times $50 per box, so that is 700,000. So we put 700,000 here, and we know that the February sales will be collected 80% in February and 18% in March. So we take 700,000 and we times 18%, and we've got here 126,000. So total money that we collect is 766,000. Alright, so that is a cash receipt. Now, cash payment. You see that's so much information here, but don't worry, we will read each sentence and we'll figure out whether that is the cash payment or that is a non-cash item. Okay, so you know that for a manufacturer, for a trading company, the first payment that we always have to think about is from the purchase. So we purchase any goods and then we resell it. So the first item would be from purchase. How do we know that how much this company has spent on the purchase of the goods? If you read the second paragraph here, the entity buy beans from local farmers, and the farmers are paid $0.2 per 500 gram cash. Look at this, you means that there is no credit sales here. That means as they buy it, they pay it, right? And now if you look at the statement of cost of goods sold, The materials here is actually the bin bag, right? So you look at this, the beginning balance, direct material purchase, and the materials available for use. Don't be confused by this, all right? If you look at this, this is the figure that we want to pick, the direct material purchase. We want to know how much they have purchased during March, and that is the figure 330,000. And don't be confused by other figures because that is not relevant, right? How much they have left have before they purchased this month. That means how much they bought during February. There's nothing to do with March, because when they purchase things in February, they already pay in February, and when they purchase in March, they pay in March. So from the purchase we have, that is 330,000. Right, you have to be very clear on this point. That is cash. And then the second point would be the labor cost. We can put that here, direct labor, and that is 90,000. Now you wonder whether if you still wonder, the labor cannot be stored. So as you use that, you pay. If you use the labor, and you pay, right? And then the third one would be the overhead costs. The overhead cost is 115,000. But if you read the second paragraph again, you'll see most or 80,000 of the entity factory overhead is depreciation. And you know that depreciation is not a cash item. So you have to take that out of the overhead. So you see that the overhead left would be 150,000, 15,000. And you take away the depreciation, which is 80,000. So what you have left is 35,000. And this would be 115,000 and minus 80,000 depreciation. Never include depreciation in your cash budget, okay? Now that is all for the goods. Now you come back to the statement of profit and loss, and you try to find all other items that that they already pay. First, that would be admin salary, and that is 80,000. Okay. Next would be the sales commission, and that is 69,000. Because they say that all the expense are paid as incurred, unless indicated otherwise. So you just take the figures as it is. Advertising. Now, this is tricky. Read that carefully, okay? They spend 75,000 worth of advertisement in March, but they pay for 10% of its advertising in the month of advertisement and 90% in the following month, which means if they tend to incur 75,000 worth of advertisement in March, they will only pay 10% of that in March. So I can say advertising expense in March is 7,500, which is 10% of 75,000. Now look at the advertising in February. So I have another item which is advertising in February. They say the amount of advertisement in February is 60,000, right? And 10% of that would be paid already in February, and 90% of that would be paid in March. So you take 60,000 and you times 90%, and you have 54,000. So that would be 90% of 60,000. Okay, that is advertising. Now bad debt expense. If you recall from your financial accounting subjects, I can't remember which subject it is, but you know that bad debt expense, or we call provision for doubtful debts, is not a cash item. So even though it is included in the profit and loss statement, it will not be included in the cash payment. You just provide for the bad debt. Okay, now so here you can total. No, you haven't total yet because we haven't picked all the details because we still have the dividends to pay. Okay, so the one advice is that once you think that it's already done, like you have listed all the items, read the question again and check if you have included all the details. And in this case, I almost missed one item, which is the very last sentence, the dividend. The dividend is 15,000 per month. And now, as you come all the details from the top to the bottom, you know that you have included all the figures. And the total cash payment is, you add all of them and you come up 680,000. And now number 3 would be cash balance. So to calculate the cash balance, you know that you have opening cash, which is 25,000, and you have cash receipt, which is here 766,000, and then you have total cash available. You add them all and you have, alright, and then you less cash payment, which is this amount 680, and then you have cash balance 31st, right, March, which is 110, 500. Okay, so that's it. In the next video, I will show you another problem of cash budget that does not provide you with statement of profit or loss, but then that would be, I guess that would be much easier without the statement of profit and loss and the statement of cost of goods sold, because in here actually you have to extract the information out of other financial statements. And I think that is very good because then you can test your understanding of financial accounting. Okay, bye, see you in the next video.